Good morning. My name is Tony Hixon, coming to you from Hixon Zuercher Capital Management here on Tuesday, July 7th, 2015. It's a beautiful day here in Findlay, Ohio, and my family and I just got back from vacation on the shores of North Carolina. We were there actually when there were some shark attacks. We didn't see any, so that was all good, but definitely our thoughts and prayers are with those who were affected by that. Had a great time, had some rest and relaxation, and crazily enough, the same news that dominated the headlines when I left was still there when I got back a week later. So this morning we're going to talk to you about some of the events that drove performance, drove the markets in Q2, quarter 2 of 2015. The first one being Greece, right? I'm sick of hearing about Greece. You're probably sick of hearing about Greece. Let's put it in context. So Greece, their GDP, they go to work every day, they produce products. In 2013, their GDP was $240 billion. So if we take a look at the United States, in the Detroit metro area, their GDP in 2013 was $224 billion. So 240, 224, Greece's economy is roughly the size of the Detroit metro area. On the global scale, Greece is meaningless. It's not a very big country. So why is it such a big deal? Why is it dominating the headlines? Well, the word I'm going to teach you today is contagion, right? If I catch a cold, I'm contagious. What happens in Greece may happen to other countries within the European Union. If Greece defaults, well, it has defaulted on its debt. If Greece cedes from the European Union, other countries might follow. Italy, Spain, France, all of those countries are dealing with over-indebtedness. And what happens in Greece may happen to other economies, other countries within the European Union economy. And what the markets don't like is destability. Those types of events destabilizes the global economy. The markets like stability. So when those types of events, those kinds of news come out of the European Union, that's why volatility is driven on what's happening with Greece. Another thing that drove performance and drove the markets in Q2 was just, especially here in the United States, was our robust economy as far as labor. We've created, last month, just 223,000 new jobs. For the first 6 months of the year, we created over 1 million jobs here in the United States. So the economy is cranking along, it's doing really well, and you know who's paying attention? The Fed. Janet Yellen, the Fed governors, they're taking a look at the unemployment rate, which is, really low, 5.3%, down in recent memory. I can't even think the last time it was that low, probably prior to the last recession. And they're taking a look at that and say, you know what? I think it's time for us to raise rates, right? Our economy is strong enough, our workforce, our labor force are doing a good job, we're able to increase rates. If you're curious to know how interest rates affect the economy, look at last month's video update, and I explain a little bit more about how the rise in interest rates will affect the economy. So, they're thinking about raising rates. Most of the brightest minds in Wall Street feel that September of this year will likely be when we first see our first rate hike. What will happen in the weeks ahead? Well, we're going to hear more about Greece. Like it or not, buckle in, we're going to hear more about it as they continue to figure out what to do with that country and that economy. The second thing will be earnings reports. Earnings season starts again here in July. We're going to see some earnings reports from companies that have done really well, and we're going to see earnings reports from companies that haven't, probably specifically in the energy sector. The energy sector is still coming to grasp with how to operate a business with $65 oil. They're used to doing $100 oil. We can open rigs, we can hire new employees. Well, they're still laying off employees, they're closing down rigs, they're having to figure out how to deal with, how to run their companies with $65 oil. So as these reports start to come out, it will likely drive volatility throughout the earnings season here in July and into August. Will we see a pullback in the weeks ahead? Possibly. Is it the end of the world? Absolutely not. America is not going out of business. Greece definitely has its problems. America's economy is actually going very well. So what we specialize in, as part of a free market economy, is that pullbacks do happen. Corrections occur. And what we want to do is take advantage of those times to reevaluate your goals, your risk tolerance, to make sure that we're invested properly alongside of your goals, your financial making your financial goals a reality. The other thing that we do is specialize in creating portfolios that mitigate risk and that participate in the types of global economies and global events that we've been talking about here on today's video. If you have any questions on anything that we've discussed today, please give us a call, 419-425-2400. Again, this is Tony Hixon coming to you from Hixon Zuercher Capital Management, wishing you a great rest of your summer. We'll see you again very soon.